Hi there, it's Bill with Smart Trades, and it's June 24th around 12:40 Pacific time, coming into the close. And I just want to do a little bit of a review here of the counts on the S&P, the Dow, and the Nasdaq. First off, let's look at the S&P. I've got a 130-minute chart up here, which I find is kind of a nice balance between the longer term and getting a little bit of the intraday patterns as well. And I think the count that has to be respected at this time is the possibility that we've got an A down. Some folks are counting as one, doesn't really matter at this point. And then a possible ABC back up. And you can count here within C 1, 2, 3, 4, 5. And then a possible impulse wave developing to the downside. 1, we should get a bounce at some point back to 2, and from there another major leg down. One thing to look at here is the area that has been kind of the major pivot for this market, and that comes in around the 1105 area up to perhaps maybe 1115 or so. And again, this has sort of been the pivot. It's been the pivot for the closing lows and then the closing highs. And 1105 is probably the area to look for. Also, the previous fourth wave, which probably best calculates around that 1100 area. So that's an area to watch for if indeed we get a bounce later this week or early next week. Also, just a quick look at one of the alternate counts that folks have been throwing out, and that is that this is a leading diagonal triangle down. And one of the problems with that count, again, to my way of thinking, is that we're failing to get to the lower end of the trend line. In fact, if you'll notice, we don't even make a new low on what this leg here, which would be the fifth leg of the diagonal triangle. Now, some folks say, well, let's look at the closing data. If you look at the closing data, you actually don't have a diagonal type pattern at all. In fact, it's a bit of an expanding pattern. So it's not the whole idea of a diagonal is eliminated pretty much if you look at closing data. So it's not to say that that's an impossible count. It looks a little more right on the Dow and the Russell, but it doesn't look right to my way of thinking on the S&P. Now, one other possibility, assuming that this is a B wave here, is let's look at alternate counts, because B waves are notoriously complicated and unpredictable. And let's eliminate our little 1, 2, and just relabel this as a continuing pattern that may indeed go higher, and probably going to look more like this if it works out. And again, we just connected these two highs here, put in a parallel trend line, and there's a gap down here. Hard to see on the S&P. I think it shows up better on the spiders because of the calculation problems on the S&P. Those calculation problems, just by the way, are something to consider if you are doing intraday counts on either the Dow or the S&P cash, because they don't correctly show the opening of most stocks. They use unchanged issues to calculate the opening, and as such don't properly reflect gaps and sometimes the extremes of the high or low of the day. And on that note, let's go ahead and bring up the spiders. And you can see here that gap is much more pronounced, as is the low of the day off of that gap. Anyway, here's that same pattern. And again, the possible scenario is that this correction is going to continue and perhaps go back up and test this gap, which I'm calling the secret gap because you really can't see it on the S&P and the Dow. So we'll see how it plays out. We certainly could bounce back up there. We need to hold soon, though, if we're going to do so. And again, my favorite count at this point is, at least the one to work with, is the fact that we've already peaked. Let's look at the Nasdaq cash. And here we go again with that ABC rally, possible completion. In the case of the NASDAQ, we basically have filled that gap. Again, definitely a possibility that we're going to go down sharply. We probably are going to bounce a bit. That focal point is a little bit different on the NASDAQ, and the bounce might take us back into that 1900 area if indeed we get a bounce. Let's see what happens. And finally, here's the Dow. And you can see the subdivisions within A, B, and then 5 waves up of C. And again, I think the main thing here when you're counting wave structure is not to get too caught up in the details, rather to look at form. I mean, basically what Elliott wave is a catalog of fractal forms rather than looking at extreme detail within those patterns. And the bottom line is that this rally, whether it's a triple zigzag or 5 waves up or whatever, it's impulsive in nature, and it also fits Fibonacci-wise in relation to wave A. And so, whether or not you'd label this as a double, as an irregular zigzag, or the whole thing as a diagonal triangle down, the bottom line is we have what appears to be a termination up here. We have an impulse type leg down. So let's look for that rally back up, and let's look here on the Dow. You're looking at approximately the 10,380 level. That's also the top of that previous fourth wave. More or less, the actual high of that is 10,367. So that area between, say, 10,370 and 10,400 would be an area to watch for a bounce in the Dow. Again, assuming that we do indeed get one. That's about it for now. Hope you're having a good one, and talk to you soon.